reconnect. Can you hear me? Can you? There we are. It looks like it's now working. Okay, right. Sorry, let's start again. Get rid of that. So as I was saying, we have. Hopefully that's still connected. Hang on a minute. It's looking like that's gone off again. But yeah, there we go. Sorry. Obviously, we've got the uncertainty of what Trump may say in his speech. You know, as soon as he's inaugurated, he'll be at the desk within hours, basically. Remember last time, executive orders were name of the day was try and get himself through the roadblocks that were in the Senate and the Congress. He hasn't got that now. We've got a clean sweep. The Republicans have a clean sweep of the House and the Senate. So, you know, it's going to be, you know, anything he wants to do, really, those that are on his side, he will get through because he's appointed very key allies in key positions. So obviously, from a fundamental point of view, obviously obviously it's America first policy that involves, according to what he said pre-election, significant tariffs on friends and foes. So Europe could be hit quite hard. UK, particularly, Sir Keir Starmer hasn't been invited to the Prime Minister of the UK hasn't been invited to his inauguration next week. And obviously, the situation in China. So three big situations. Obviously, there's the situation still in Ukraine. He said again he can settle it within a few days. Whether obviously that's clearly not going to happen, but it looks like any deal will involve Ukraine having to give up some territory with the Americans are going to back it. That's going to be hard to swallow for Zelensky and many Ukrainians, but that looks like what might be on the table. The situation in the Middle East has improved. We got this ceasefire again. His envoy was part of the final negotiations, so he's claiming credit for that. Fair enough, I would argue. Biden was saying it's more or less the deal he put on the table in May, and Netanyahu wouldn't agree to, but with the pressure of that final few hours with Trump's envoy, that's pushed it over the line. So although there was another attack in Gaza yesterday as well, and it doesn't come into effect until Sunday, but that looks like that's moved forward. But what happens next with a strong man back in the White House and with a strong centrist America first policy? So we'll see how it all pans out and see how the markets react to it, more importantly for us as traders. And then obviously the other big elephant in the room remains China, Taiwan, tariffs, relationships. He supposedly gets on really well with Xi Jinping. So he says, but we'll see. He's a deal maker, isn't he? He's a businessman, born into money, made lots of money, lost lots of money, and his backers love him. So we'll see what the next 4 years brings for us all. Obviously, as the old adage is that America sneezes, we all get a cold. So we'll see if it's going to really change. I mean, there's a really interesting article this morning. I don't know how I'll show you. I don't know if I can show you it here. I mean, the Economist is quite a sort of right wing, quite a supporter of the Trump policy, but the leader in the Economist this morning is talking about shredding up 80 years of American foreign policy. So since the Second World War, America has been like the defender of democracies and an inclusive sort of foreign policy. That might all go out the window as he focuses down on this America First policy. So this obviously say the different sort of diplomacy from Greenland to Panama and Mexico. Big shocks there. So how much of this actually gets through, how much of a fiscal impact and how much impact he has on actual inflation, again, only time will tell. We've had the Trump trades, they're still in place. Crypto went through 101,000 this morning, I think. So yeah, let's see how it all pans out. Anyway, enough of that. We got plenty of time to have a look at that. So let's just have a quick review of the week so far. So Monday was fairly quiet. We had Friday's CFTC still showing a very strong bid on the dollar, which seems to have changed a wee bit this week. We'll look at that, see what the CFTC reports are like next week. But it looks like that's shifted a little bit in the last day or so, following those weak than expected PPI and CPI data this week. So we kicked the week off with Chinese trade balance, which is better than expected. And this morning, let's just run forward to, because probably won't mention China again. Run forward to today. And we've had GDP bang in line with expectations. The fourth quarter, 5%, 4.5% for year on year from the Chinese. So surprise, surprise. They hit their targets, and some of the other data out of China was quite positive as well. So a bit of tick up in Chinese data. It's still looking, you would argue, quite weak, the recovery in China. But I'm not saying they've manipulated things, but that wouldn't be the first time. Remember, it's a communist state still, and the government rules significantly with a hard hand. Tuesday was the PPI. Tuesday was PPI data, which was the first sign of things perhaps cooling. So we had a miss for US PPI on Tuesday. The event of the week was the CPI data on Wednesday, where we had this core number. Where's the core number gone? Here we are. The core number coming in here at 3.2% compared to 3.3%. Remember, the market had about 85% expectation of a 3.3%. There was a consensus really around that 3.3% for the core number. And it came in under, so it's weaker. And then remember, PPI, producer price index, feeds in to what the consumer's price index looks like in a few months. So it's suggesting perhaps more weakness to come on that one. We also had the notorious Empire State manufacturing area being quite woeful, but that does jump around quite a lot. The following day, we had jobs. Sorry, on the earlier that morning, we had a weekend reading for UK GDP inflation as well. Sterling's been very much under the cosh, and the euro, based on the back of the stronger dollar. But again, we've seen a bit of a turnaround in both those two currencies in the last couple of days as well. Where did I get to? Wednesday, yeah. Thursday saw another strong jobs number. The initial claims coming in here at 200. Can you see that? Yep. Sorry, let's move that down a bit. 217. Well, I've lost it there. 217,000. Remember, said yesterday. I say all the time. Anything under 250, 260 is still a very strong jobs market. New claims. That's people applying for unemployment benefit for the first time. 217,000. So anything under that 200,000 level is showing a very tight jobs market as well. Core retail sales is a bit of a blip, but more or less in line with expectations. And again, more woeful numbers out of the UK. GDP was turned positive, because in October it'd been negative. It turned positive, but not as much as many were expecting. But even 0.1 or even 0.2 of 1%, if it come in as expected for November, it's still a woeful, hideous sort of lagging sort of growth. So things are very sluggish in the UK. Early in the day, we'd had a good employment number out of the Australian dollar, which helped lift the Aussie against the dollar as well for a bit, but then it slid into yesterday again as well. So that was yesterday. Say Philly Fed was much better. It was the inverse of the Empire State earlier in the week. Came in at 44, but again, these two numbers are quite volatile and can jump around a lot. But that's relatively positive for Philadelphia. Remember, Philadelphia, was thought to be a swing state. Went for Biden last time, swung back to Trump this time quite significantly as well. So Philly Fed index coming in at 44 and positive. And something I didn't mention yesterday, but the Atlanta Fed GDP now number was also raised to 0.3 of 1%. It's the probably most widely touted forward-looking measure for GDP, the Atlanta Fed one. So that was a positive yesterday. And as I said earlier, the Friday data, so it's quite thin on the ground. We got Chinese data better than expected, and the GDP coming in at 5%, 5.4% for the fourth quarter year on year, and 5% for the year, which is what the Politburo wanted. Also this morning, again out of the UK, we've had a miss for UK data. It's not particularly a surprise. Retail sales for December, quite a significant increase over December. where again they were negative as we saw in the US, but not really above the 3%, which is what many were looking, and it came in at 2.9%. The core number for the month shrank as well, and the headline 3.6%. That was better than what we'd seen in November. People obviously did stick their hands in their pockets for the Christmas and the Black Friday events, but it wasn't as good as the market was expecting at 4.2%. So another miss for UK data this morning. Later on, we got the final reading of, or the first reading for inflation in the euro area as well. That's expected to come in at 2.7%. Housing starts, and then the CFTCs for this week from Tuesday, because of they were held up because of the bank holiday last week, coming in as normal on a Friday afternoon. There's also a speech by Governor Bailey, which I've missed that. I don't know where that is on, but let me just check that, because the sterling has been very much in focus. And then we get on to the charts in a minute, so just bear with me. I haven't got that on this. Yeah, that's Bailey's actually speaking today. Anyway, I'll have a look at that possibly later on. So down as an impact event on my other calendar there. So let's have a look. Where are we? We're here. So let's bring up the charts, get rid of me and bring in the chart. So we'll start with Bitcoin. We're long this, as we said, here on an end of day basis from the 14th. We're up 15th. We're up again yesterday through the 100,000 level. Again, we've breached the key 100 level, and we've closed above it for the first time in about 10 or 12 days from the big shakeout we had there on the 7th. So from the 6th of January, we're back to that level now on the 16th of January, and we're 101,800 or 102,000 if you want to buy that on our platform today. So the spread is taking us over 102,000 for crypto. The other big move yesterday was the gold market. I hope you've seen DaCosta's little post he's put up, the trade of the day yesterday. It was certainly see what he was meaning. See the big candle yesterday following the strong candle we had on Wednesday, and the initial breakout on or up candle we had on Tuesday following Monday's quite a significant shakeout. But you see we've created new highs for the week and for recently. Yesterday went through the 2,700 level yesterday, and we closed at these around about the 27.15 level. If you zoom this in, you see this level was a previous area where we've come down so far. So we'll and it's proved the case quite significant. So we'll see if we can breach this resistance area here, which sits around about the 27.25 area. Top of this candle here sits at 27.40 with the next up leg, but that was a big shakeout. That was a sort of a weaker sort of initial support area from this leg up we'd taken, the final leg up we'd taken, the final buying leg up we'd taken at the end of October to took us to that 27.90 zone, 27.85 I think we went to, didn't we? And then it was a down, and we stalled a wee bit, but it wasn't for very long, around about the 27.50, 27.40 zone before we went unwound really quite aggressively as the dollar came back in that first half of November, or bouncing back. And that's, so we're in a key resistance area for gold at the moment. So be careful. However, you know, the higher time frames are still long. We had the initial buy here on the 2nd of January. We followed through here on the 8th with the new high. It pitched, breaking and holding above the 50-day. The 20-day later on broke over the 50-day moving average here later on in that week. And then on Friday, following non-farm payroll, we had a good up day, but then it looked like it was shaking it out. Quite a significant one. Yeah, it was a significant engulfing candle on Monday, but that was just a down day in a series of 8-9 up days, and we've been up Tuesday, Wednesday, and Thursday. We were higher again, and so we continue to hold the bid this morning. If I look at the hourly chart on gold, there we are. We've rallied yesterday, and we're sort of sideways this morning. So there's that 12, that 70-20 zone. We went 27-20 zone. We went into yesterday. So gold remains bid, but it's looking a bit weaker this morning. It might have a small intraday hourly candle under the 20-hour moving average, might suggest a bit of weakness. But as we say, the higher time frames has dragged us up. So although the RSI has moved down into 50, it's bounced off it a wee bit. So just watch that one on an end of hour basis for gold today. Not much more data to move the markets today, to be honest. So let's go back to the Forex markets before we look at the indices. Let's look at the pair of the week, which is sterling, which remains in a big old downtrend. Although, as I've been start to say this week, there's been some sort of signs of support at this big round number, which we see time and time again, 122, providing some sort of stable support, perhaps. Look, big wicks. Remember, wicks, a rejection of either higher or lower price. Not much decision here on Monday, same on Tuesday. Wednesday, we'd eked a bit higher, but again, rejecting much below 122. So clearly at the moment, there are some buyers around this 122 area, this round number, having breached the 2024 low. Obviously, these are 2025 lows at the moment. But you see that at these round numbers, none more significant than the 125 area, where we went sideways for about 12 days before we finally broke down, having a first attempt that was bought back, and then we broke lower again. So we've now been here 1, 2, 3, 4, 5, 6 days. It's quite extended for 122, but we'll see if this actually proves to be the case. But the trend, as far as end of day trade is concerned, it's still down. The 4-hour is still negative. Despite a rally up earlier in the week, we've gone back down. But again, you see us just pivoting through this 122 area. So the low earlier this, was it last week? No, it was Monday, 121 as well. So, but not much enthusiasm for pushing this much lower. We've had a big rally on the FTSE yesterday and the day before as well. We'll have a look at that in a minute. We've got to our first target on that from those trades. We'll go through the trades as well from the other night in a minute. So sterling remains weak, and on the hourly chart this morning, it's a bit of a sideways action as we've started Friday with that weak retail sales data. We saw another sell order on sterling, and it's bounced, but we're still under 122 currently. So we need to what time is it now? It's 9 o'clock. So here in or 10 now here in London, so all the markets are open, the participants are in, and have been for a few hours. So yeah, that's still looking weak. Sterling, I'll be careful to buy it, but trying to catch the bottom on that one. Euro 102.40 at the moment. Similar sort of pattern to the sterling. This is the hourly chart today. If we look at the daily time frame, it remains in a big old downtrend, but a bit more of a resurgence from these from Friday's low here, following non-farm payroll. We've sort of bounced up quite significantly on Tuesday, 14th. It was Monday's low, wasn't it? We went lower. There's non-farm payroll last Friday. We were down, and we bounced back up. Nice little candle formation there. But again, it's struggling to move back up, and the 20-day now is coming down to this 103.30 area, which had been a previous low area. Remember, we talked about that, didn't we, for November and December? So we need to break that and break that 20-day. If we're going to start to move up, this may be a bit of a consolidation zone. As I say, things very much in abeyance until we see what is actually said on Monday, how the markets react. Obviously, stock markets are closed on Monday in the US, but see how they react to Trump's announcement. So sideways action, say not a lot going on today. Yen's come back in anticipation of what's going to happen next week from the Bank of Japan. Further chatter that they may be looking to raise rates. So we went into 155 for the dollar yen yesterday for the first time. If we got to the daily, first time since the 19th of December. So we'd had a go at 158. It didn't happen. We got the high as 159. We got with eyeing 160. Well, we were consolidating at highs, but there was the significant breakdown on Wednesday following the CPI data as we went under the 20-day moving average. Remember, we talked about that on Wednesday. So the follow through yesterday was lower into the 155 area, and you can see that 155 was an initial reaction, resistance area to this first rally we had, or this last big leg up we had from September 12 through to November 12 or November 15th or whatever that is. That 15th. So this October-November rally, 2-month rally, stalled around the 155 level. We retraced to 150 and then had a go. What looked like we were going to 160, we didn't. We stalled around the 158 area. Now we're back to 155. So we've had a long leg, short leg, longish leg, and now moving down. But we are now heading, as you can see here, into a key support area, the 50-day moving average. So this becomes key next week going forward. Is the anticipation of the Bank of Japan going to follow through? How are we going to mix that with what Trump might say or might not say? Are we going to see the 50-day moving average holding? Are we going to see this down trend line holding? Up trend line holding? We shall see. Some significant area now for dollar yen. So watch that as we go into next week, my friends. Have a look at that over the weekend. And see where we go. Still in a significant uptrend, although we've breached our first major support, the 20-day moving average, and we're testing the next big one, which is the 50-day. And as you can see here, the last time we breached it, we were under for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days, 9 days before we started to then lift off quite significantly. When you see here, the moving average pattern was different. We came in to touch it and rallied up. So we've just rolled over on the 20 with these. So we'll see how that holds. 155, absolutely key for dollar yen going into next week. Let's just run through them all while we've got them here. Aussie back to 6.62 from this move down to 1.6140 area. So it's had a better week, the Australian dollar. I say jobs were better yesterday. The weaker CPI on Wednesday out of the US helped lift this, but again, another one into its key resistance area and then turned lower. So there you can see that two big lines in the sand for the Australian dollar against the US dollar. 0.6250 and the 20-day moving average. Hope you can see all that now. You can see all that very, very clear resistance area. 0.62, 48, 45, but you know the round number is 0.6250. You want to put an alarm for a breach of that. Every time we got into that recently, you see it's been sold off. So perhaps a sell order here, a big breach of that on an end of day, and we could run up quite quickly. Oops, we could run up quite quickly to the. Why did it do that? I do want that. Oh, I don't want the trade panel. There we are. It could run up quite quickly to the 50-day moving average up here, which is coming down now to the 63. 30 area, which should be the key area earlier in the year. We talked about quite a lot, didn't we? 63, 33 it was in fact as well. So yeah, so resistance here, the 20-day moving average, this top of those daily charts, you can see that really nicely just above that at 60.6250 for the Australian dollar. But as you can see, very benign. We're under 50 here on the RSI. There's no direct duration, so it's consolidating at lows, which is, you know, can be quite good. That's quite a long area. I mean, we could break out significantly to the upside, having had this big down leg, but equally we could also move down again, but some sort of potential inverse head and shoulders potentially. So it might be looking a bit of a bullish pan if we break at 20. I don't see a big significant break of that 20-day moving average. The last time we did it, it was sold off really, and it wasn't a big break of it, was it? So no change of that trend yet. Stay on your surfboard. Short for the Aussie dollar. Canadian dollar, a bit more, a similar pattern, but obviously inversed. We got consolidation at highs. The 20-day moving average here is holding. We've been down into it for 3 days this week. We bounced off it, and we had a good day yesterday, back over the 5 and the 9 moving average, but we're still going sideways. This 56-month high at 144.64 still holds. but the 20-day here has held and held again here and here and here as it is here. So consolidating a high, that's positive. So again, obviously Canada in the crosshairs as well as far as Trump's concerned, and the potential 51st state. What a carry on. But obviously the political uncertainty in Canada continues to spin. Talk that Mark Carney could be the leader of the Liberal parties, but it looks like they're going to get quite a drumming from the Conservatives at the election later this year. Remember Mark Carney, former Bank of England governor. He got quite a lot of stick here in the UK. But anyway, but it seemed like a very personable guy. Stood up for the Bank of England against the government, or with the government, and against lots of critics. But anyway, dollar CAD consolidating the highs. The loonie still under pressure. Again, watch your 20-day moving average for a longer term moves. Swiss franc very weak. The dollar continues to rally, and here you see that it was a long way from its 20-day moving average, a bit like the euro and sterling. .9062 is the major support. So we're still rallying. We're currently trading at around about .91, so it's been a strong move again, as you say, for lots of the dollar pairs. And again, the trend is set on that one. And finally, the Kiwi, as we're doing this wrap for the week, very similar pattern to the Aussie, consolidating at lows. The 20-day moving average is at 56.32. Similar pattern there. And woeful RSI at 37. That's weak. So again, similar sort of 3 days up, and then yesterday flat, today flat. That doesn't look like that's changing anytime soon, does it? So dollar remains on the front foot, although against the euro and sterling, which has been the weakest of the two big ones, it's come back a tad, and the yen's holding up based on expectations of an action from the Bank of Japan next week. So that's our majors. Our indices continue to look a bit mixed, to be honest. We had an up day yesterday. We've had a quite a positive, massive rally, obviously, on Wednesday following the Israeli-Hamas peace deal and the strong earnings numbers from the banks. We've had some more banks coming out with strong numbers. Yesterday, we actually closed down 12 points to 59.37. on the S&P 500 yesterday, but we've got some long positions open, haven't we? Yeah, so we went long here on the 15th following that big trade. Our stop loss is currently still down now. I look to move that upward side. So we had a down day yesterday, but the 20-day moving average held, and we're up currently today. But we've obviously got first resistance here at 59.80, where the 50-day moving averages, and then the big 6,000 is the next line in the sand for the S&P 500. So sit on that one, see how that one goes. End of day, we're up. We're sort of just about in the money on that one, having had a down day yesterday. FTSE, we took some profits yesterday as we went through our target. We took about 80% off that. Our first target was around about the 8,400 level. I was quite surprised we continued to rally as strongly as we did yesterday, but anyway, it doesn't matter what you think, does it? Just do what it says. We were interesting highs here. If we got to the weekly chart for FTSE, the weakness of sterling, as you can see here, has made a very significant impact. So we're having the best week for the FTSE for a very long time. You see the predominance has been weak weeks, hasn't it? These big down weeks here. So a strong week for the FTSE, 84.75. And I'm not quite sure that's this market doesn't go back far enough. I think it only goes back to last year, doesn't it? The monthly. So I can't. Yeah, it only goes back to. Oh no, what am I talking about? I'm talking rubbish again. Just ignore me. So new all-time highs for the FTSE. A big laggard, but all-time highs for the FTSE, 84.78. Is that correct? I'm saying all-time highs. Yeah, it must be. Yeah, over 8,000. Yeah, 8,475. Yeah, see, here I am in the UK, British citizen, British resident, not even knowing what his own stock market's doing, because Although some of my pension funds obviously in the UK, I don't trade the FTSE particularly, other than the other day when it triggered on my system. It never very rarely triggers, to be honest. But there you go. I should take more interest in my home stock exchange, shouldn't I? But anyway, all-time highs. We're in the money on that one, and we still got 20% of our position open on that FTSE long. So thank you very much on that one. There we are. That's a daily time frame. S&P we looked at. Nasdaq 100. The Nasdaq was down again yesterday. Actually, let me just show you. I like this site, Finviz. Visualizer. This is significant, guys. If you're new to trading, bear this in mind. When a stock market either rallies significantly at the beginning or the end of the day, that can be quite significant. So we sold off in the final half hour quite significantly yesterday and across all the markets yesterday. So be careful. Look, Apple, second biggest company or third biggest company in the world. I think it is now, isn't it? Or second biggest, or is it still bigger? I forget. We don't trade stocks, individual stocks here, do we? 4%, quite a significant shakeout for Apple. Hasn't moved that much in a long time. Big down day ahead of earnings in a couple of weeks' times from them. So yeah, we had a flat down day, having had a big old rally the day before for stocks yesterday. So any questions about anything? Anybody? Let me just have a quick check. Check the chat box. There's nothing here. Let me check my phone. So if you use WhatsApp me, just bear with me in a second. Okay, that's my wife messaging me, telling me to bring some ID. Someone joined the library. So where was I? Nasdaq. No, there's no questions basically for you guys. Right. So Nasdaq, RSI hitting into the 50 resistance area. So are we going to start to go bullish? We'll see. We didn't actually have a trade on the Nasdaq. We'd had a short one, which was I think it was on here, wasn't it? From Monday or Friday, I can't remember. No. It hasn't triggered on my end of day system, so simply because of the significant resistance. I know that's how it's coded into I see big fat thick resistance here. We've got the 50 and the 20 here at 21,000 round about 21,200. If we zoom this up, guys, 21,200 50 day and the 21 day. We had an up day, big best day for a long time. On Wednesday, retraced yesterday, and we're back positive so far today. Remember, markets are closed on Monday for Martin Luther King Day and the inauguration of the 47th president, a certain Donald J. Trump. So NASDAQ remains, he's consolidating, really, let's be honest, but it's a key resistance area. So we need to wait and see if we're going to go back up to test 2,200 or 22,000, I should say, or we're going to fall down as well, or we could go down quite quickly. It depends on how these, obviously the earnings season continues to pan out and what the expectations for 2025 and 2026 are from the companies report and the tech companies report in a couple of weeks. It's the banks that kick off first and retailers and the techs later on. The Dow, similar pattern, but positive day on having been a weaker of the three. Positive day on Tuesday, took it back over its 20 day. We went long on the Dow as well, didn't we? I think. Have we got on the Dow position that's open? Why isn't that over the DAX? I thought we were long on the Dow as well. I can't get my notes here. I'll come to the Discord. I'll check on Discord. Yeah, I thought we were long the Dow. Perhaps not. Perhaps it was. Oh, anyway. So it took us a positive. That is a positive trade here on this strategy here. So that should have certainly, for some reason, hadn't triggered long. I have to check. I don't think it triggered long on mine for some reason. Perhaps too much down still, even though it's gone over its 20 day. But that's a positive move. First target is 43,600, where the 50 day is. That's a thicker resistance to get through. So big day on Wednesday. Can we hold it? RSI is looking quite nice. So I'm not quite sure why that. There you go. Vagrancies of automated systems. Manually, I would have taken that as a long position on an end of day. I don't think my manual system actually triggered on that one. But, Anyway, I've been blathering for over 30 minutes now. I'm sorry to keep you all if anybody's still here. We did take a long position last night on the DAX. That was one we put up. We've hit our first tentative target. I've taken not normally the 80%. I've just taken about 50% off on that one, the 20,800. So again, is that all-time high? I don't think that's all. Let me just check. It's all-time highs for the DAX. No, it must be, yes, all-time highs for the stock markets in Europe, thanks to the weakness of the currencies. So also today, a strong morning and early trades took us through that first target from last night. So DAX has hit target or initial target, and we've taken, I say, half the trade. It's still half the trade on because there's still some momentum in that one, I think. On the DAX, is that everything? Indices, yes. If you want me to talk about because I've got my system looks at the yen, the Nikkei as well. So if anybody's interested in trades on the Nikkei, it's just the numbers are massive, like the Dow, but that's been triggering this week as well. So let's just have a look at it. Anyway, it was reversing on expectations that as we've been saying, the Bank of Japan will actually move next week to increase rates. So the Nikkei got a hit on Friday following non-farm payroll, and it's been down again this week on the expectation of a move from the Bank of Japan. So we've moved down again. Quite a volatile week for the Nikkei, down at 35,800 level again, but you can see it's been moving lower for the last week or so, since last Thursday. The break was last Friday, and it's under its 50-day and 20-day, and that's going to cross under and looking negative as well. So that looks like that's setting up quite a strong trend if you do trade the Nikkei. I say it comes on my system, I should trade it. We looked at gold, didn't we? It's moving next. Yeah, of course we do at the beginning. Yeah, so moving higher. This key resistance area. We need to break away from that if we're going to continue to high. There'll be some shorts getting plugged in around here, but if we hold 2,700, that remains positive. Obviously, there's major support as we saw at the beginning of at the end of December, held at 2,600. It looked like we were going to go lower here, but the strong up candle there on the second has been vilified and followed through on. So gold continues to rally to the upside. So that's our lot for our index. Oh, let's just finish with oil, because oil's obviously been very much in the crosshairs. Big old rally. I was saying yesterday we took some profit on this as it got it sort of went really overbought, didn't it, up to here where it went to what was it? It was 86, I think it was, wasn't it? It's our RSI indicator. So some profit being taken off on that, but we're still long on that from these moves here, from this consolidation. Remember, we were talking about these positive, these parallel trend lines, always positive in it when you're in a channel mode, but you had to be patient and just add to it as we started to break out. See the breakout there now a bit more clearly, and that was the key day there. This is the beginning of the new year as we pushed to new highs on an end of day basis. As we went held 70 level, went to over 72. That was the key day, and then through 75 last Friday. Combination of advanced talks, expectations about the peace talks, and non-farm payroll data, again very strong to lift the US economy and expectations for 2025. So off we went again. So some nice profits bagged on the oil market. Also, let me just leave you with Bitcoin and the week ahead. So 102,000. We know we've breached it, and moving to the upside. So next week, as I say. It's going to show me next week. This next week. Let's do next week. Cause it is, isn't it? Apply. Oh, it's got everyone's data. Let me just put in the major events. Oh, it's got all these companies there. Okay, let's put the high impact ones. So next week, the US is closed. I better put the twos on as well. There we are. Apply. So Monday, 20th, inauguration day of the new president, and the US markets are closed. PPI out of Germany on Monday. Tuesday brings us jobs from the US, ZEW sentiment for the Euro area and Canadian CPI. Wednesday, not a lot going on Wednesday, lots of chatter. We got Nagel from Germany, Lagarde from the ECB all chatting. Remember the World Economic Forum, love them or hate them, they're still influential. All their meetings start next week as well. They start on Monday, don't they? I think soon it's Wednesday. I thought it started Monday as well. But that goes on for a week or two, doesn't it? In the mountains in Switzerland, lots of chatter. Not really market moving, but opinions and thinkers together. So watch that in the background with regard to sentiment. More important will obviously be what gets said on Monday from Trump and his guys, and as I said, it's any executive orders that come in next week as well. So that's significant. Thursday, retail sales from Canada, claims, the weekly claims out of US as ever, and so it's a relatively quiet week next week. And PMI data starts again on Friday next week. And Michigan data out of the University of Michigan later on Friday as well. So a relatively quiet week. I'm saying quiet week as far as economic data that's planned to come out, but sentiment data, fundamental data could be actually key. We've got obviously earnings next week as well, continuing to ramp up. More companies reporting impacting the stock market. So have a great weekend, everyone. Stay safe, and as ever, may the trend be with you, may the pips be with you, and all the very best to you and your families. Take care. See you soon. Bye-bye.